Hi everyone. So we currently have historical low interest rates, mortgage rates right now. And as such, you're probably going to start seeing more and more higher mortgage penalties to leave the current mortgage rates that most people are bounded by. Now, one of the major factors that people look at is definitely the interest rates. And as such, we spend a lot of time talking about interest rates. We look at different lenders with regards to interest rates, but most people don't spend enough time with the whole gamut of or factors of that product. Now, one of the things that we need to understand is the exit strategy on that mortgage. So, are you being put on the right term? Is the product flexibility what you're looking for? Now, interest rate, like I said, is one of the major factors in picking the proper lender. But at the same time, we need to understand that there's more to it than the interest rates. Currently, 5-year term is by far the most popular term that people in Canada are picking. Now, our experience, we see clients come back in around 3 years or maybe sooner, whether or not it's due to a refinance scenario or the client is coming back because they want to upgrade to a bigger property, or maybe downsizing to a smaller mortgage, smaller penalty, a smaller property. Now, one of the things that you need to understand is that, again, the commitment on the term plays a factor into figuring out what kind of penalty you may be exposed to moving forward. Now, looking at fixed versus variable is an important thing to consider. A variable rate mortgage will typically have 3 months penalty interest to exit that mortgage. Now, 3 months interest is typically not a cost prohibitive penalty for most people. Now, when you look at a fixed rate mortgage, most lenders are charging the higher of 3 months interest, or what we call IRD, interest rate differential. Now, interest rate differential is where most people are really stuck on when there's a big difference in the current mortgage rate that you're committed to versus the lower interest rate that's being offered to right now. Let's look at an example. So let's say you have a mortgage of $500,000. If you have a variable rate mortgage, 100% of the time, 3 months interest is what you're going to be charged. So if we say that you're in a 2.3% as an example, with the current variable rate, your penalty would be around $2,875, which is 3 months interest. So $2,875 is still it's a good sum. But if you have a $500,000 mortgage, typically your property value is going to be higher. It's not necessarily cost prohibitive for you to make that decision to break that mortgage and move on to another new mortgage or another property. Now, let's say you're in a fixed rate mortgage. We typically would compare the 3 months interest versus the IRD, interest rate differential. For that same scenario, you having a $500,000 mortgage, and let's say you're 2 years into this 5-year term, and let's say you're in a 3.5% range, with the current mortgage rates being offered today, you may be looking at around $12,000 to $13,000 worth of penalty. Now compare that to the 3 months interest of around $2,875 versus $12,000 to $13,000. So now you understand why people are really getting mad or feeling that they're stuck with a current mortgage because the low rate at the time that they were chasing now is actually working against them. Now, one of the things that you need to understand, like I said, is the exit strategy. It's not just the penalty, whether or not it's 3 months interest or IRD. IRD is something that, like I said, will typically be the larger of the cost given the current interest rates. You also need to understand what the discharge fees look like, the e-registration fees, the annual or monthly fees, the renewal fees on some of the lenders and stuff. Now, it's very important to understand that when you have your mortgage professional talking to you, you need to understand, or we need to understand, how long you intend to keep that mortgage. We also need to understand what your exit strategies and the privileges are. So know that when you're going through a mortgage agreement that's maybe 10 pages long, don't just concentrate on the interest rate. Like I said, interest rate is very important, but the product compilation on whether or not it's fixed versus variable, what the exit strategy might be, what kind of penalty exposure, what kind of privileges in terms of paying down, those are all important factors when we're discussing the current mortgage. Now, like I said, it's more important now that you have an expert mortgage agent talking to you as opposed to somebody at the bank or the branch or a mortgage agent that's just trying to put you into one specific product. We need to understand your need, we need to understand your plan, and obviously projecting what your short-term, long-term perspectives are on this specific mortgage. Thank you for watching, and please stay safe.